In today's video, I'll be going over how do you increase your chance of passing a prop firm challenge by giving a step-by-step guide, and also little diving into the risk management side that it does ties in with passing a prop firm challenge. So kind of jump in over here. Prop firm are essentially a very good tool for you to build your own personal portfolio funding for, especially for beginner traders. Just speaking from the past experience, who has been trading 7 years plus years. Those old veteran traders, we all started out with our own capital. There's no such thing as prop firm, right? So when you trade with your own money, you're actually, let's say if you spawn yourself with the 25 account or 50k account, you're actually losing that 50k. In the prop firm, you're only losing your subscription fee. So in my sense, prop firm is popular, but at the same time, it's a double-edged sword. And I think also in the current space, it have created a lot of bad habits for new traders. Since it's so cheap, essentially every time you blow account, you just put in another 50 bucks or whatever subscription fee is. Very cheap compared to the size you get. But what they don't actually see is why they're failing and they're not able to get a payout for a lot of these new traders, and they're building bad habits. So kind of jump into why prop firm are set up majority of time for a trader to lose, and why essentially it's set up the way, and why is it such a money machine for prop firm, right? So prop firm, 90% of trader, they don't ever get payout. There's probably statistic-wise 70 to 80% they will pass the evaluation phase, which I think is a very easy part. But once you pass the evaluation phase, you have to meet a consistency rule within the payout join period. Depending on each different prop firm, they have different consistency rule and different rule for payout criterias. Those essentially only 90% of trader, from those 70% of the trader that has passed, only 90% of it pass, which is very few. And only a 10% trader, like such as big trader Jade recently pulled up a 2.6 million payout. Those are very rare cases, and typically once those payouts paid, those traders are typically banned from taking another prop firm or trade for that, using that prop firm to trade ever again, because they don't make money from those traders. Prop firm make money from trader failures. So majority of trader who are experienced enough, they typically build enough capital from prop firm, and then they start trading their own personal. So jumping into the exact reason why 90% fail. One main reason is most new trader or trader who just got into the prop firm space, 50k account doesn't mean you have 50k to play with. You only have 2k because that's your max drawdown. So a lot of times when people say only risk 1% of your total account, so that for example, if you have a 50k account, 1% is roughly $500. But $500 to 2k, which is your max drawdown, that's 25% of your real capital, right? So technically you're not risking 1% of your account, you're risking 25% of your account. Okay, so passing your account challenge, when it comes to prop firm, a lot of time it comes down to risk management. If you don't have a risk management, most likely you will blow account after evaluation phase, which is majority of the trader, which never reach the prop firm. So they will pay the subscription fee, and then they pass, and then they pay a hefty amount of activation fees, and they essentially throw that away. And why they set up those rules? Essentially, they made the rule much lenient during the evaluation phase, but when they get to the payout phase, it's much harder to actually get a payout. And that's why a lot of traders will fail at the payout phase, and then give that little taste that you're so close to it, and then they'll resubscribe to it, pay more money until again, and then that's how essentially prop firm makes money, right? In short. So in this video, I kind of want to dive into the step-by-step guide on what I have built into my system on passing a prop firm in the very safe way and the very easy way to pass. So in jumping into the step-by-step guide. So in prop firm, there's no way for you to not take on big risk, right? If you want to take on small risk, you could. You will just take forever to pass the evaluation phase and then get into the payout phase. And even once you get to the payout phase, you will take forever. I mean, not forever, but like 20 plus days or trading days or 10, 15 days to even get a payout. And then also just jumping into, even if you really want to size down, for example, NQ. If you're trading MMQ, mini MQ, right? You can't really risk anything lower than $200. most of the time, even if you just buy one contract and with the amount of drawdown, it's roughly around like 125. Right now, how volatile it is, it's roughly more than $100. So there's no way for you to even risk 1% of those 2K. That's not possible. So what I've essentially defined here, how I break down my risk is you first need to identify some sort of system. All right, today in this video, I won't be identifying edge and system. You can go over on my other videos on how to define an edge and how do you learn about different trading entry and also different setup, daily bias. Those are separate video. Today's video is more for those traders who already have an edge but are still failing to pass the evaluation or fail to get a payout. Majority is due to risk management. Okay, so first thing I want to jump into is for the max risk, you always use your drawdown number. You don't ever use your account size number. So for example, for 50K account, usually it's a 2K drawdown. That's a max drawdown. You only you divide that by 10 of them. So essentially $200 per trade. That means essentially you have to take 10 trade back-to-back losses. You have to take 10 trade back-to-back losses in order for you blow up the account, which is very, very unlikely. And if I'm talking about the first step here and then you don't even know what is your typical statistic, what is your max back-to-back losses, consistent losses, then you're not checking the statistic, right? You're not checking you're not journaling how many losses you can take. So you first need to at least have some sort, at least I say 30 trade journal minimum. I would say ideally 50 to a 70 trade journal from your demo account or however your past experiences. You need to have those journal and then look back and see what is your max consecutive losses in the row, and that essentially will give you a guideline. If your max loss is more than 3, 4, or 5 days, in the row, or 3, 4, 5 trades in the row, you need to adjust your edge. That means your edge is not refined yet. It's not correct for you to take 5 losses back to back in the row. Typically, my back to back is 3 max. From over 100 trades, you will see 3 back to back losses, which is not likely. So I would say 10 back-to-back losses is more than enough. So 2 max per trade is essentially what you're aiming for. So you're risking 200 your risk, and then you to at least target for 400. So that's the second part. We're aiming to at least 1 to 2 RR. So you're risking 200 to gain at least 400. Why this first 2 is very important is you need to at least have a system of give you 2 RR minimum. Meaning, let's say for example, the first trade you take is a losing trade. You can take the second trade. Second trade, let's say it's a winning trade, you will make $200 for the day. Or even let's say you don't even hit 2 RR, you just hit at least 1.5 R, you're making at least $100 on that trade. You need to be more, you cannot be 1-to-1 R to in order you could, but it will make passing the challenge very tough. So at least aim to 1 RR, so it give you a lot of breathing room. So every time, let's say for example, for the first day, you took 2 back-to-back losses, which is 400 total. The third trade, you make $400 back. Essentially, now you're break even, right? Overall, your capital is break even, and this is why this works so well. It makes your system sustain in the game much longer. And trading prop firm is essentially risk management. How do you manage risk for me to stay in this game long enough, and then for essentially the good day that have the winning streak come? Those are the days I want to be on those. A lot of traders is blowing up account on the bad days. They're not sustaining their account, and then when the good day come, they cannot take a trade. They essentially already start over. They cannot, and they always end up in this cycle where during the bad days blow up account, and during the good days they're not there to maximize it. Okay. The next thing is number 3, the rule. Essentially, you can look on the left hand chart here. Enter trade. If it's a winning trade, you ask yourself, is it a winning trade? If it's yes, it's a winning trade, which is your first trade, then that's it. You call it a day. We're only aiming for 1 good trade per day, okay? 1 good trade per day, which is your 1 to 2 RR. That's considered 1 good trade. If your first trade is a winning trade, that's it. Step away, okay? If it's not a good trade, you ask yourself, is it a break-even trade? Is it a losing trade? If it's yes, it's a break-even trade, it's a losing trade. Then, is it a second trade? If it's not a second trade, then yes, you can continue take another trade. So for this part, if it's a break-even trade, it's not a losing trade. If not, you can take another trade. and then essentially this will be a second trade. But let's say if it's your second trade, right? This isn't your second trade, it's also a losing trade. You're stopping the trade. You walk away. That's it for the day. You lock your account, step away. The max, if you take 2 back-to-back losses, you are no longer, that means the market is not there for you today. There's no good setup. Either you're not emotionally straight for that day, or the market just doesn't have setup that suits your criteria that day. Better to walk away and then save your ammunition for the next day. Okay. The reason I'm saying this is, for let's say for today, you take 2 back-to-back losses. Essentially, that's $400 losses for the day. The next day, if the first trade you take for the next day is winning trade, which is $400, you essentially break even. You already scratch out the trade for this whole week. And then you continue this cycle back and forth. It will create a system for you that you will have a winning strategy that will be able to pay out in the long run. The whole goal for you to maintain your prop firm as long as possible until those good days comes and you can maximize those good days. On the bad days, you want to conserve your ammunition, your capital for the long run to come. That's the whole point that a lot of new traders and beginner traders are blowing up count, is due to they not risking management accurately, right? Going back to the first slide here, risk management is greater than your edge. Even just having an edge, you cannot have, you won't be able to make it for your own personal account, forget a payout. That's impossible. In trading, it's not about how much you make, it's about risk management. How long can you preserve your capital long enough for those good days, right? And learn to sit out. Sit on your hand, being patient when you don't sit a trade. Those are essentially the psychological part. But for you to understand risk management, to be greater than your edge, that's the #1 rule you need to start putting into your mind. Or else you will not be able to reach the payout phase, which is impossible. And that will be all for today's video. Hopefully this gives you a little bit insight on your risk management, and eventually you will get a payout and start building your own personal account. If you find this video helpful, please leave a like and subscribe. Risk management, I will send you my personal risk template that I have built out throughout the years, and that has helped me pass the evaluation account and also get multiple payout of 6 figures. Happy trading.